David, if we do get both stimulus and vaccine at some point in the next 6 months, where will the 10 and the 30-year yields be in 12 months' time?
Well, I would have to think that you'll get a huge risk-on trade into the marketplace. There'll be flows out of the Treasury market. And I think you finally see in that scenario a shift into value stocks, because that's when you'll get the reflation trade. I'd have to say, being a long-term bond bull, that, for a period of, say, 6 months, and we saw this recurringly, with all the stimulus. Look at all the QEs that came out in the last cycle over that 10-year period. You went through periods where 10-year note yield went up 50, 75 basis points. I think, once again, that'll be a great buying opportunity. But, if you give me those assumptions, vaccine, huge fiscal stimulus, we're off to the races, then I think we're going to have the Treasury market sell off. Again, I come back to think about what it means to go back to the way things were before the pandemic. What was life like before the pandemic? Low growth, low inflation, low interest rates. And principally, for a lot of reasons, two of them are things that aren't going to change, which is an egregiously high level of debt, which is a huge constraint on aggregate demand going forward. We can't get out of that. That's a huge constraint over beyond the vaccine and the pandemic. And, of course, an aging population profile. These are all secular changes that are going to keep interest rates relatively low for a long period of time.
Shepard Smith here. Thanks for watching CNBC on YouTube.